In this episode of the Australian Investors Podcast, you're going to hear from Leigh Gant. You've probably heard from Leigh once or twice before, but in recent years, Leigh has invested his time and his capital in buying micro-sized private companies. There is a lot of discussion in the Rask community lately about what it takes to actually buy whole businesses, kind of like a miniature Warren Buffett of Australia. How do you actually buy private companies, either to run or to invest in? And what is that roller coaster of emotion you might be in for? We cover all of the due diligence procedures, Leigh's story, how to manage in a new team and environment, some of the experts you need in your corner, the deal sizes that you're likely to expect, financing, business brokers, and so much more. So if you're into private market investing, or you think that one day maybe running your own business or buying a business is something that's on your mind, I'd highly encourage you to listen to this episode a few times over before making that decision. If you like this episode and you want to take it further, say for example, you want to learn directly from people like Leigh or even ask us questions, go into your podcast player or into your YouTube description, or simply head to community.rask.com.au. That's community.rask.com.au, because I'll put up a community post and discussion board about private company investing where we can go back and forth and have a proper discussion about what this actually means, some of the pitfalls and risks that people succumb to, and how to navigate this kind of opaque and grey world of private companies. I hope you enjoy this episode with Leigh Gant on the Australian Investors Podcast. Leigh Gant, welcome to the show.
Pleasure to be here. Thanks for having me.
It's good to do this in Melbourne. Really good to do this in Melbourne.
Yeah, I am loving being in here, in the studio, but also in Melbourne. Having moved up to Brisbane almost 8 years ago, I've missed a bit of the, all the fruits that Melbourne provide. Gee, I've had some good coffee today. I've had a lot.
Well, that's good, mate, because that's what we need for an afternoon podcast talking about private markets, lessons learned, good, bad, and the ugly. We're going to talk about private markets because you're, in my mind, one of the people that has not just been interested in it for a long time, but also put your money where your mouth is and has been living that life for a while now. So we're going to talk about all that. And there's been some questions just sent through this morning from the community, which I know you've seen. So for folks that haven't heard you on the show before, this is the first time we've really dived into this stuff. So maybe it's worthwhile setting the scene, a little bit about your background, take us back to wherever you want to start. I know we've talked about your entrepreneurship before and businesses you've started and sold and blah, 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 blah. So feel free to jump off wherever you want, and then I'll chime in.
Yeah, sure. Well, I guess going back to earlier days is probably good context for what's happening now. So, I've had a bit of an entrepreneurial journey. I've kind of been on both sides as well. I've been an employee as well, in amongst owning businesses. But, I've never really been cut out for being a very good employee. So the other alternative is to, start or own your own business. So, I go through patches where I want to be an employee and enjoy working with and for other people, only to quickly realize that I'm not very good at doing that.
I hear you.
So, I with a friend, started my first business over 10 years ago now. We together built and ran a 2-story gym and wellness facility off Chapel Street in Melbourne. It was brilliant. It was wild because didn't really know. I thought I knew what I was doing, but definitely did not. And was very fortunate to have, good people around us, like both in and to the side of the business that, gave us the lessons that we needed and the support that we needed. And that was, really successful. For non-business reasons, at one stage I exited and sold my portion to my business partner and moved to Queensland. So had a young family and wanted to get to the sun and the space of Queensland.
For sure.
And so my first exit on that business went really, really well. So that was dangerous because I thought, this
Just do this all the time.
Yeah, how can you lose? But Charlie Munger's got this quote. It's really about equity investing, but he says if you think this is easy, you're stupid. And so I must have been pretty stupid because I had started my next business, which was like an online version of what we were doing in the gym. And again, it was successful. It was really, really profitable.
Yep.
Because there was essentially no overheads. Right? I was coaching athletes and some special forces guys in the military and the police just through an online platform, and it was going really well. We set up a new space in Brisbane when we got up there, and everything was going well, except I just got to the point where I'm like, I've kind of already done this, and I ticked all the boxes I wanted to do in that space too. Mm-hmm. I had some really cool adventures, coached a few people through like adventuring across the Arctic, and got to be in a Disney documentary, filming one of them, and working with tactical guys is really cool. Like you train these people who can't really tell you what they do for a living, and they're literal weapons. It's just really awesome. And then competitive athletes, like footy players, CrossFitters, all that kind of stuff. So all of that, I'd done it all, and I was like, oh, there's nothing really what I want to do here anymore. And so exited that business in a different way. Just we had like a facility, and we had an online business, and we as in myself, and people who are behind me, like my wonderful wife, who, God bless her, supports me through all these ridiculous adventures I go on. We sold it for parts essentially. So it's really, sometimes businesses are really interesting as a whole, and then sometimes they're really interesting as parts.
Yeah.
I'm sure like your investor listeners who maybe do a sum of the parts valuation for a listed company would get that. But when you're like in the weeds of owning a very small business, it can be a really great way to exit, but it's very challenging to find those people who are going to buy those bits. But I was fortunate enough to do that. And to give it context, we exited about a year before COVID. And I don't know if everyone remembers lockdown, but that was not a good time for gyms. So very, again, fortunate to exit in a good way. Not a super, like I got a multi-bagger out of this business, but definitely in a good way for myself. And then...
Wow. Talk about whoever bought that. Like you weren't to know, they weren't to know.
No. Well, yeah, I think obviously the online part of that business that we
that probably would have thrived.
Yeah. We sort of had a list of like we sold portions of that client list to different online coaching businesses, and they all did really, really well. And I think some of those people are still with those businesses today, so that's really good.
Oh, cool.
And then but the facility side, it was probably tough for those, and we've seen heaps of those kinds of gyms close, unfortunately.
Yeah.
But yeah, that's sort of the business side. And then on an investing side, I've always been investing. It's been, my interest levels have been lumpy up until COVID. So, I was really, like I grew up, I was really fortunate. My dad always sort of gave me, this is how old I am, but it may sound really old, but he used to give me the newspaper, and we used to go through with a ruler and look at, different companies' share prices on the day. And so
that's how I started, by the way.
Yeah. Yes. Good. Yeah. I'm not alone.
We're a similar vintage.
Yeah. It's a good vintage.
Yeah.
But that sort of got me interested. So I know you were saying, what was one of your first investments? So I remember buying NAB when I was 16. Well, I was able to buy NAB when I was 16. And then, essentially as I turned 18 and could properly invest for myself, it just went through these periods where I got interested and then I'd forget about it, get interested and forget about it. But after selling two businesses and thinking, well, what am I going to do now? I'm like, oh, well, maybe investing is not something I do sporadically on the side. Maybe it's something I'm interested in a career. So throughout lockdown and things like that, I sort of improved my education in that side of the world. And from there, it's been a journey through Motley Fool, Australian Shareholders Association, and working with a few boutique funds here in Australia. And here we are today to talk about the crazy decision I made to go back into buying businesses. So I hope that's good context.
It is great context. It is great context. Okay, so when did you decide to go back into private markets, and what was it that kind of sparked that reinvigorated you to do that?
I was loving my time at the Australian Shareholders Association. Yeah. What a fantastic organisation that is. You know, we went through a change there where we were, you know, as a team really trying to bring the ASA into today, like a digital transformation, trying to figure out, you know, a membership model that works for everyone, all that kind of stuff. All that sort of progress was so much fun. It was really cool. But what I really valued was actually getting to know some of the fund managers and the funds that were part of our events and things like that. And I was able to do some consulting on marketing, digital growth strategies, things like that. And I just got that bug again.
Yeah.
I was like, oh, this is kind of cool. I'm building my own business on the side of my job, and, you know, getting hit with, you know, wanting like all that sort of social media around building a side hustle or all that kind of stuff. You know, I sort of got into that quite a lot. And the side hustle was going well. At the end of, you know, completing this digital transformation for the ASA and thinking about, well, what's next for me? You know, the side hustle was at the point where it was essentially the same as having a salary.
Yeah.
And I just had that bug. I don't know, you know, you can think of like an athlete who maybe retired a little bit early or something like that. I just had that bug to be my own boss again after being an employee for a few years. I had that, you know, I just wanted to step in the ring one more time.
Yep.
And I'd been trying to model myself a little on investors that I really admire. Obviously, like everyone talks about Buffett and things like that. Like obviously there's wonderful qualities there of those people and the way they do things. And these businesses like Berkshire Hathaway or, you know, in different fields like Constellation Software, they're acquiring businesses and essentially buying profits to then redeploy that capital to finding more profits. And really that's what we do as investors in listed markets, right? We save our profits from our salary.
Yep.
And then we think it's better to buy shares in a business instead of leaving the cash in the bank or something like that. We're trying to get better returns than cash under the mattress. So, you know, the side hustle had been generating profits, and I had that itch to, you know, do business again. And what I didn't want to do is start from scratch. If anyone hasn't built a startup, and Owen, I know you would know this only too well, it is so, I'm going to swear, so fucking hard to build a business.
Yeah, it is.
And yeah, if you think it's easy, you're stupid, right? Like it doesn't matter if it's a construction company, a podcast, whatever, it's just so hard. So yeah, it makes sense to then buy something that's established and the profit's already there.
Yep.
And that's sort of the direction I went. And we can talk about how it got there, but yeah, that was what lit. I had that fuel and that fire to just be on my own and give it a go.
So you mentioned like Constellation Software, Berkshire Hathaway, these types of businesses. You're also a fan of Brent Beshore in the US, is that right?
Yeah, that's right.
Yeah, yeah. Which is he kind of when he went on Invest Like the Best way back in the day, like nearly 10 years ago now. That really crystallized the idea of how profitable private markets can be. Maybe in a way it kind of romanticized it a bit because you just get like here's a guy that's like says that he's compounded like 70% a year and you're like, wow, how do I do some of that? You know? Yeah. And you're like, you just get the cliff notes. You don't get the 300, you know, meetings he's been in before and had said no to every deal and wasted his time or whatever. Where does if someone is like at inception stage like you were then, where does someone start? Like where did you start? And then what would you have done differently?
Yeah, it's a great question. I can't pinpoint the exact starting point, but here are the influences that were definitely swirling around at that formation stage of, right, here's the idea, this is what I'm going to do. So obviously these great large super investors we've talked about. And then you just start spiraling through the podcasts, the articles, the Substacks and things like that. Like, who are these business buyers in private markets that have done really well? What did they do well? And, how did they get there? So yes, Brent Bishaw is really good. So that Invest Like the Best podcast has actually quite a few of these people. And then obviously you get targeted. As soon as you start looking at this stuff, the algorithms know what you're after, and it'll feed you, Alex Hormozy and all these people who like glamorize buying businesses. They'll tell you how easy it is to buy a Portaloo business and become a multimillionaire, which is just horse shit, right? If anyone's out there thinking that they're going to buy an HVAC business with their change in their back pocket and get someone else to pay for it, through a seller buyout or something like that, it's not going to happen. I can tell you that right now. And I learned that pretty quickly because you just do. You'll find out very quickly in Australia how unwilling people are to sell their business in that way.
Yep.
But I did obviously still consumed that content. And then I know obviously business owners in my network, so talk to them. I definitely would consider a few of my friends to be mentors as well. And you just, I feel like if I latch onto a subject that interests me, I'll go as deep as I can very quickly, a bit obsessively, just try and learn everything I can. And then you need to figure out actually where you stand though, because obviously the gap between even someone like myself and a small serial acquirer that's on the ASX, someone like Kelly Partners, you had Brett Kelly on the program before. It's just like an ocean between you and that kind of style.
Yeah. Yeah, it's really interesting, isn't it? Because I think what we think are small businesses when we look at public companies are not small businesses.
Mm-mm.
I actually have this one question that was sent through from Marcus. What is the range of capital that is needed to play in this space?
Right. So this is not horror story. This is lesson number one is, so you could start with very small amount of capital. It depends on what kind of capital access you have. Because if you're going to invest in any asset, some sort of debt can be involved to, one, obviously get you the transaction, but two, to improve your returns. Debt going positively can really juice your returns. It's going to be fantastic. And if you read and learn about some of these small business acquirers, they all use debt. From Brent Bishaw, there's a great book by Walker Dybel called Buy Then Build.
Buy Then Build, yeah.
Yeah, that's a really fantastic book. And Walker's probably a lot more suitable to our audience here.
Yep.
So they'll definitely walk you through the debt that can be used. However, in Australia, we don't have this beautiful facility that the US does called an SBO loan. It's a small business loan that you can get to purchase businesses in the US, and it's very similar rates to a mortgage.
So is that from a bank?
It's a government. It's like a federal loan that you can get.
Yep.
I'm not sure where it actually sits for them, but it's definitely government backed. So there's nothing like that exists in Australia. I mean, you'll probably know this better than I do, but you can probably get something maybe against your mortgage. Yeah,
you could definitely get a line of credit against your mortgage. Yeah. Against your home,
Yeah. That would maybe be the best interest rate that you could get to buy another business. But you have to really obviously think about your financial situation if you want to do this.
It sounds glamorous.
Yeah. So back on the actual question, how much capital do you need? Obviously, you need, when you buy a micro business, no matter how small it is, make sure the business is big enough that you do not have to become the sole owner operator of that business if it goes wrong. So, I don't want to sound like a pessimist, but you need to invert all the stories that you hear about of optimism in buying businesses to protect yourself and your own capital. It's no different to buying a stock on the stock market. If you're only focused on what can go right, you're going to miss on what can go wrong. And so if we look, like, let's say we're going to just think about operating earnings, the EBIT of the business. If there's not enough EBIT there to pay a general manager for your industry full time to run that business and run it well, I would be very skeptical about buying that business. I didn't do that. Technically I did, but to be done really, really well, I would say that's lesson number one that I learned is that, I wish I actually went a bit bigger so that there was that buffer to have someone in, so I'm not in the weeds and on the tools as much as I did in the last year.
So when we've spoken previously, you've talked about things like, well, we talked about like vendor financing. We talked about a whole bunch of different strategies for people to kind of parlay into private markets. Could someone get started in this space with $100,000 of equity and then, I don't know, get another couple $100,000 of debt? Like, is that possible?
Yeah, totally. Like if yes, from a general point of view, yes. Obviously, it depends on what other assets they have and how they organize the debt. So to put it into context, this business that I bought just over a year ago, if we looked at my investable assets, it would not be a very large position.
Okay.
Right. So, it sounds like I'm very wealthy. It's a good
from
language.
From your vast portfolio.
Yeah, my enormous portfolio. But the truth is, it's not. So the risk for us is for my family is not as high as it may be. So if you're going to put all your eggs in that basket, you'd want to be damn sure it's going to go well. And I am, quite protective. If you talk about Brent Breeshaw, his thing is about being a steward and protecting legacies and things like that. And I get that very deeply. Like I really care about, my children and things like that. So I'm not going to risk that so much that if everything went wrong, it went to zero.
Yeah.
Would we survive? So this private investment, if it went to zero, it would survive. You can talk about core and satellite portfolios, right? Like, think of it from, if you're going to buy a private business, think like a VC. How much would venture capital be in your satellite portfolio? Would it be 100% of your satellite portfolio? Would it be 50% of your net worth?
Yeah.
Maybe if you're a cowboy, but
yeah,
I'm a bit boring.
Yeah. Call me a bit boring. Yeah. Okay. So that all makes sense.
Yep.
Once you've kind of taken stock of like the capital that you might have available and maybe your tolerance, where did you go then? Like, where did your search take you? Like, are you like on that Seek website? You're looking for businesses. You're speaking to business brokers. Like, what were you doing in that kind of due diligence phase?
Yep. Okay. So after going deep in all the freely available content, I found like just through advertising, I found like a business buying mastermind and local, right? For those reasons that I said before, like the environment and the structures and everything is very different in Australia than it is in the US.
So when you say local, you mean Aussie?
Yeah, Aussie. Yeah. I was in a small group of people that were learning from someone else who had already bought businesses, and it was great. We were able to ask questions and get those experienced answers that you just can't find on ChatGPT or the internet or a book. And then I had no intention to go as quick as I did. So I was just putting in the reps by downloading IMs, information memorandums from broker sites, and not really Seek, but mainly from broker websites, and just poring over them, just like you would maybe if you're reading annual reports for your stock market investing. I was just poring over them, and then in the group we were sort of doing case studies. So, here's example A, this business found this information memorandum. What would you pay? What kind of structure would you look for? What could go wrong? What could go right, etc. So we did a few of those as a group. It was really cool. When I was poring over these, I found an information memorandum that represented a business which we can talk, the business that I bought, that I was like, oh, this is in my wheelhouse. I would understand this business very easily. And it's not very big. So this could be a really good opportunity to try buying a business and building it to see if, this whole strategy could really work.
So your wheelhouse being like digital, this experience that you have, smaller businesses near you up in Queensland, that type of thing?
Yeah. So the business is a marketing agency, and the work I'd been doing, in the ASA with Motley Fool, inside of the boutique funds, it's sort of crossing that line between, digital strategy, sales, and marketing. So the agency that we bought was, digital marketing for financial services. It was small. It was a retiring owner. Fantastic. It's kind of exactly what you want to look for. Is it's had stability of earnings until the owner decided to retire. That those earnings were going down, because if people aren't aware, there's so many businesses for sale inside of brokers and online, and then they're just the ones that are being advertised for sale. There's a lot of businesses for sale. Yeah. So if you can,
I saw something on your LinkedIn not too long ago, actually, where you talked about this. You were referencing some report or whatever, but it was like, I can't remember the figure. It was wild around how many people are looking to retire or sell in the next 10 years. I think I had the number here somewhere.
That'd be good, because I can't remember it.
Yeah. Okay. So here's my numbers that I had. So I did some ABS numbers. There are 2.7 million actively traded small businesses in Australia, 2.7 million. Over 100,000 of them have more than $2 million of revenue or turnover. 72% of small and medium businesses plan to exit over the next 10 years, which is crazy.
Yeah.
So you hear numbers like that, but then that's where I remember now. The thing that you referenced said 72% of these businesses are planning to exit, but only 1/3 of them have done any steps or had a valuation or done anything to get ready for that. So that means the ones that are for sale is just like the tip of the iceberg.
Yeah, exactly. I think there's probably a lot of baby boomers who own their businesses that want to hand over their business to
sure.
That would be great. And then of those, I'm sure there's a fair percentage that the children don't want the business.
So many.
So they're not prepared. Those owners are not prepared to sell their business. And then it just maybe doesn't come into the mind till it's a little bit too late that we should sell our business before, it's too late. And I just actually worked with a friend who's buying it's like a gardening business, but on large scale. So they do like Bunnings locations, a few footy ovals, things like that.
Yep.
And it was a case like this. So the owner wants to retire, and it's like on Friday you go, oh, I want to retire. Monday, I should sell my business. And it can take years to sell your business. And the business I bought was for sale for, I think, at least 2, maybe longer, at least 2 years. So if you are in that bracket, I recommend that you start taking steps now, like, work with your financial planner or accountants and start preparing your business for sale. The way I've always the way I learnt to build a business is to build it as if you're going to sell it tomorrow.
Yeah.
Like systems, processes, profit first, everything, like get all that squared away. Because either your business is going to work really well and work without the owner involved in the weeds, and that's an asset that will spit off cash into your pocket, or it's sellable.
Yeah. Either way, I 100% agree. No matter which pathway you take, you keep it or you sell it, you need profits.
Yes. Yeah.
So may as well get profits.
Yeah. And systems and processes, which, again, I'm the boring guy, but if you're in there, I don't know, dotting the I's and crossing the T's every day, that's not a business, that's a job. Yeah. And for some people, it's a ball and chain. Like that's pretty bad.
Yeah. So you've come across this IM, and you're like, oh, this could be quite interesting. What was the next step?
The next step was to forget about it. I came across it like pre-Christmas, and I was still an employee at the time. And I went, oh, that's interesting, and just forgot about it. And then took a decent break over the summer from work. Like had a lot of leave backed up after working hard on this digital transformation. So took some time off. Like I wasn't really serious about it.
Yeah.
And then I sort of came back and thought, oh gee, I need to like get a wriggle on. I need to do something because I'm ready for that next step in my career. And so I'll return to the IM. And I reached out to the broker to get some more information. It's a very step-by-step process when you work with a broker. So they lead everything and you will be ticking the boxes with them. So that's kind of nice if you're buying a business. Now, when it's with a broker, typically you're paying a premium because it's going through the broker. And it also means that they haven't been able to sell the business pre the broker.
Before getting there.
Yeah, you're paying a bit of a premium on something that wasn't easily sold. So that's, I guess, lesson number 2 is, I don't want to say this, but I will, that businesses that go to brokers are going there to die. Not many, like I'm sure there's a low percentage of turnover in sales at business brokers. Yeah, but thankfully, the business broker was fantastic. It was a really actually enjoyable process.
What kind of documents or what type of things are you doing and looking at?
Yeah. So first you get the IM, and the information memorandums are generally pretty vague. It won't give you much information really about the business, enough to get you interested. And then the next step, you'll obviously sign a NDA to get more information on the business. And that's where you can start finding out the actual business name, a bit more about the details around ownership and things like that. And the broker will take you further and further. I got to meet the owner, have a casual discussion with her about the business, ask as many questions as I could without going further into confidentiality agreements.
Yep.
And typically they don't want you to go into due diligence level questioning and information until you have like put a deposit down, and they don't. And in Queensland, you don't need to do a letter of intent. It may be different in other states, but essentially, you couldn't do due diligence until you're really ready to buy and you have a deposit.
Because that protects the vendor or the seller.
Yeah. And before you are ready to put a deposit, you are able to have a discussion around the structure in which the purchase will happen. So, there's probably like, I don't know, for people listening, if they feel like these are lots of different terms and sounds a bit scary, and it is, but in some ways the process is actually pretty simple. But you will need an accountant, you will need a lawyer, and for simple, smaller deals, you don't need to spend a lot on either of those. But unless you are an accountant or a lawyer, having that expert advice is highly recommended.
Yeah. Just practically speaking, and this is not necessarily, I'm not asking you for financial advice or tax advice or anything like this. I'm just curious how you approached it. When you went into the buying mode, did you set up tax structures like family trusts or companies before that to do the acquisition?
Yeah. So we already had a family trust, and I already had, because I had my side hustle, that company. I actually retained my ABN so I didn't sell my company pre-COVID. I sold my business or the businesses, the parts.
Yep.
Which is actually partly helpful when it came to buying the next business, because the structures were there and we can carry over things from years ago. But we had, to protect everything else, family trusts, already had the company within the family trust. And then, we had the side hustle generating revenue and profit in that.
Yeah, okay. That's kind of cool. And did you go down the loan route? Did you get debt capital?
Yes. Yep. Yeah. So yes.
Yeah.
I won't go too deep, but absolutely. Yep.
Yeah. And did you just approach like a normal bank for that? Like a judo bank or NAB or something like that?
Great question. So for the amount that I was after, this is where it gets hard, right? So the amount I was after, all the banks just say no. right?
Yeah. Okay. So they want to do big deals.
Yeah, they want to do big deals. They would be after personal guarantees against your house and things like that. But remember, I said it was in a family trust. So it depends on how can you guarantee something that's like asset is elsewhere.
Yeah.
So I couldn't guarantee against assets that I technically don't or that the company doesn't own.
Yep.
So I went to a loan broker that I knew from a friend who owns businesses, and he had used that broker to also generate loans for his business.
Okay.
So it's a complex web of, hey, who knows, going to my network, who knows someone that can help me orchestrate this deal?
Yep.
And that's how I got the lawyer. Already had an accountant, and that's how we got finance for the business. And this is where, so in buy then build, in a lot of freely available media, you'll hear that people say you can go buy $1 million business with $100 down or something ridiculous like that.
Yeah.
Because Americans have this access to the SBA loans and we don't. It's much harder to get capital for business in Australia. Now, if I wanted to go lever like $1 million property, probably would have done it in a day.
Yeah.
But for business, it's not a very friendly environment. It's actually very difficult. But, I guess it depends on your personal finance.
Yeah. Okay. So would you recommend someone that's going on this journey for themselves to find one of those groups? Because it sounds like there's often this cliche in private markets that it's who you know because it's like opaque, unlike public markets where all the information is available to everyone. Everyone knows the CEO's name. Everyone knows the shareholdings of the biggest shareholders. Private markets are not at all like that. So would you suggest to people that want to do this to go and find those groups?
Yeah, definitely find those groups. You can join maybe some entrepreneurial groups as well. Like I think it's really good to talk to just founders of businesses, like someone like yourself. But there's also other like communities of business owners, like CUB, things like that.
Yeah.
I can't advise enough for people to go look for horror stories. Go find all the worst stories possible and then figure out if you've got enough, inside you to go through that. Because it's a roller coaster. But at the other end, if you're successful, it's going to be incredibly empowering because obviously money is great. Like we are here to make profits in business, but what does that profit give you? Less one bad employee is that you're the master of your own time. It's really cool to hang your hat on something that you built and did. I did that. You're contributing to other people. Like it is really, it's challenging managing people. But gee, it feels good to go, the thing that we're creating is putting food on their table. And I love that. I really enjoy all the people I've worked with in all my businesses. Like, we had a much bigger team in the first business. Today I only have 2 team members. But gee, it's thrilling. So back to groups. Yes, finding groups. I think they are pretty hard to find.
Yeah, I was going to say.
Yeah.
You had a random ad.
Yeah, random ad. Yeah.
Maybe just go for everyone listening, just go into your Facebook algorithm and be like, small business community.
Yes.
Something like this. And just keep repeating that same query and see what ads pop up.
Keep searching for,
M&A group.
Coin laundries to buy. And then you will get targeted with all the ads, I'm sure.
The classic coin laundry example is just everywhere, isn't it?
But so that group that I was in, it's not active anymore. But the guy that ran it, I'm friends with, and we still talk today. And that's like that group hasn't been active for over a year.
Cool.
It finished.
Yep.
So there are great people out there, but you can go speak to other business owners. Don't discount your local lawn business, right? Who may have purchased another lawn business. Right?
Yeah.
Don't discount the local cafe owner who, if they've had a cafe for more than a year,
they know how hard it is.
Yeah, that's a good business operator.
yeah, bloody oath it is. That is so true. I'm glad you said that because they're everywhere, right? The business owners are out there and just soak up as much of that as you can.
Yeah.
One of the things that, and we don't want to sugarcoat it too much today, but one of the things that compels people towards private markets that are public market investors is like the valuations.
Mm-hmm.
Can you give us a sense of what you were seeing maybe in your kind of universe of like what multiples or comparables or however you thought about it and however it would translate to this audience?
Yeah, absolutely. So definitely in the small business market, multiples are exciting, especially when you compare it to listed markets. So what's the PE on Commonwealth Bank at the moment?
It has to be
30?
Like 30 probably, yeah.
Right, 30 times earnings. So we purchased our business for just under 2 times earnings.
Yeah, right.
Right. So think about it like if the business stayed exactly the same, the earnings would cover the purchase price in just a couple of years.
Yeah.
Right. All else being equal.
That's a key phrase, all else being equal.
All else being equal, because I can tell you it did not stay the same. We can go through the roller coaster, but yeah. 2 to 4 times earnings. So the lawn business that we were just talking about, gardening business, lawn business, that is going to go through, it actually negotiated down to 1.5 times earnings, but the structure I have encouraged is actually to increase the price, but change the terms to a longer earn-out. So you've got to think of both sides. The buyer wants to get the cheapest possible price with the best handover possible.
Yep.
As a retiring business owner, you want cash in your pocket and see you later tomorrow.
Yeah.
So we've got to find some sort of middle ground. So that's where seller finance or vendor finance, if you find someone who's going to like give you amazing terms on vendor finance, that's like glorious, because I can tell you, it's just, I have not come across it at all. I've never, the business brokers I've spoke to just laugh. It's just not going to happen, vendor finance.
So vendor finance meaning that you use the business that you're buying to fund the payments of the previous owner.
Yeah, and the owner is not receiving their settlement for quite some time. So essentially they're loaning the business to you while you take advantage of the EBIT or the profits.
Yep.
Which sounds fantastic to a buyer, does not sound very good to a seller. So yeah, 2 to 4 times multiples, are pretty common in service style businesses. So from marketing to gardening, mowing, financial advice,
accounting.
Yeah. So it just depends on maybe the niche that you're in. So I know like financial advice, there's a table out there that shows obviously the more higher net worth client list attracts a bit higher multiple than say advice for retail investors, things like that.
Yeah. So I've only got a couple more questions for you. One is probably the one that we've been skirting around is how did the business go?
Okay. So yes. So it's been, I will not sugarcoat this. It's been absolute roller coaster. Today it is good. And if you zoom out, it's good. And Tony Robbins says, life doesn't happen to you, it happens for you. And I try to remind myself of that at 3 a.m. when I'm waking up about this bloody business. So the purchase went really well. The owner was a delight. She's a lovely person. And, she did everything to the book, like to hand it over. So no problems there. The business, it's over 3 decades old. This business started writing actual newsletters to like your mailbox, like hard copy. And now today, obviously, it's about email and digital. So that gives you an idea of
the legacy.
The legacy. But that means that the systems and processes, they're kind of like handwritten. It wasn't really there. And this is, my ego probably came in and said, no probs. I've done SOPs for many, many businesses. I'm going to come here and we're going to ramp things up. I'm going to double the revenue, all this. Yeah, I was pretty gung-ho. And that just flushed that down the toilet. That's not how it worked. So we had a key staff member who was, fantastic at her role, essentially running the agency on her own, with minimal input from the previous owner. And, I wanted to keep it that way. I did not want to be in the weeds doing day-to-day execution. And unfortunately, she had some family health issues and challenges, and I definitely supported her as much as I could. But it did mean that she needed to leave the business, and that was about approximately 3 months in. That came as a surprise. And so this is what I mean by if you don't have the EBIT to support a general manager, if something goes wrong, you're going to be doing all the work yourself. So I did have to up how much input I was doing, way less managerial and much more execution. And we were lucky enough to find a new team member to join, but that transition was really hard. So at the time we're trying to bring in systems and processes and write new ones, the key person who was in charge of those systems and processes had to leave the business. And so I have a new team member who's brilliant, and she now essentially, it's like starting a new business again. So yeah, that was a lot of sleepless nights and just, a lot of anxiety around, oh my God, is everything going to fall apart here? I've only had this for 3-4 months.
Yeah.
Here I am writing email newsletters when I'm supposed to be the owner, and focusing on just making it through the end of the week rather than growing the business. But then, actually we just got rolling and started snowballing. Things started going well. We actually did start growing the business, which was good. At the same time, my other business, just my consulting, which was my side hustle, really benefited from me being focused on the whole picture.
Yep.
Rather than it being a side hustle. It was, I'm free, I'm out there, I can help your business grow. So that actually flourished at the same time. And then sort of after about 9-10 months, we were in a spot where the revenue of the business had grown about 30%.
Cool.
But our systems and processes had improved margins by a good 5% probably, if we annualized it.
Yeah, classic.
Yeah. So, if you grow the revenue and improve the margins, that's fantastic. That's the dream double, right? Yeah. And other agency owners that I knew, I'd actually been in discussions with them just throughout that process of hey, I need to get through this. This is our situation. What would you do? I'm asking for advice and help, but we got through that and they saw that and they said, well, we're actually interested in rolling you up into our agency. And so we received an offer on the business, about 10 months in of ownership, which was, really flattering. Couldn't work out, unfortunately. Well, not unfortunately, just it couldn't work out. And I can't really go into it, but it just couldn't happen in the end. But that was a really good vote of confidence. And then, so we're at the top of the roller coaster. We've gone down the bottom. Now we're back up the top. I'm getting offers in. I've grown the business. Margins are going well. We've got systems and processes in place. I'm the ego's inflating again. And then I went to Japan for a month. Really needed a circuit breaker. Going through that roller coaster took its toll, and needed that break. And my wife had long service leave, so it was time. Yeah. And during that time, we had just a change over in clients. So our clients are on annual agreements. We have a concentrated client list, which is fine because the average lifetime client contract is 7 or 8 years. However, when a couple need to move on, which is going to happen in your business, you don't keep clients forever, even if your average lifetime is long. Yeah, they move on. So mid-holiday, where I'm yes, I'm taking time off. We had that rollover where clients were okay, new financial year, we're going to go in a different direction. Yeah, which is fine, totally fine. But it all happened at once while I was away. And I was here we go again. So we went from, having an offer on the business, which looked really good, to now needing to rebuild revenue while I was away. And, that sort of the growth of the business is kind of where my strong suit is. And I was like, well, I'm not going to be there for a month. So just need to handle it. And we had some systems and processes break down because we'd never really had to exit clients before and hand them over and that kind of thing. So that system and processes was a slight on me. I'd never thought of that because who would think that your auto-renewing clients are leaving?
Yeah.
So, that was really disrupting. But here we are today. We're, back to exactly where we were just 3 months ago. So new clients on board. Those systems have been written and implemented. And, we've got 2 team members that know how to do their work and quietly get it done. So, it's good. But I've glazed over it. It's fucking awful going through that. Like, it's horrendous. So we'll look down the barrel and say, if you're thinking about buying a business, you need to think that, can I go through that? Or is it better just to have a side hustle and maximize that and invest in listed markets where someone else is going through that, not me? Yep. And if your one stock in your portfolio goes down because they have a bad quarter, you can easily exit, sell the stock and buy something else.
Yeah.
You can't do that with a private business. So you've got to want it.
Would you do it again?
So we were talking about this over email. So, I would prefer to be in amongst the group. Like the first business I had, we didn't always get along, but I had an amazing offsider in my business partner. Like we had different strengths. We had different views on the world. And that's why we complemented each other well. I think that's why the business did so well, because we both did what our respective geniuses were.
Oh, good. Yeah.
So I would do it again, but I would be more interested in buying shares in a private business where I could just flex what I'm really good at and help that business achieve its goals as a smaller share owner. So I love business. I love the game. I mean, I hate the roller coaster, but I love the game.
Yeah.
So yes, I in a way would do it again, but I wouldn't do it the way I did it in the last year.
Okay. So maybe just a couple of final questions here. I've already asked you for resources that you found to be helpful. You've got the book, trying to find those communities, speaking to business owners around you. Is there anything else you'd add?
Yeah, I would actually go speak to business brokers. Go find Link Services or Link. Link is one of the franchised business brokers in Australia. So they'll have offices everywhere. There's others that I can't think of the top of my head.
Yep.
Go speak to a business broker. Find some IMs, research those, go to the broker and just go through the process up to where you got to do due diligence.
Yep.
And just get the reps in. That will not be a waste of time. It is free, except for the time and energy you need to put in.
Yeah.
Yeah. I think that's the best way to get used to the process.
And so experts you need in your corner, you can just tell me yes or no.
Mm-hmm.
Like a financing broker, like a specialist broker?
Maybe. Yes. I'd say either a loan broker or a financial planner who would then also have access to those experts. Yeah.
Okay. Accountant?
Yes.
I was going to say financial advisor, but business broker?
No, not necessarily. You don't need to buy a business through a broker, and you can find businesses for sale without a broker.
Okay.
And there's always a premium on the broker selling that business. So definitely not. If I was to sell my business, I'm not using a broker. I will sell it. I've never used a broker before to sell a business.
Yep.
But yeah. No.
Lawyer?
Yes, you'll have to have a lawyer. Yep.
Yep. Okay. That's good. Anyone else?
A mentor. You need a mentor. You need someone that you can confide to, talk to.
Yeah.
Someone who can give you an alternative thought to your own.
Mm-hmm.
Yeah. With a lawyer as well, just on small deals, you don't because everyone would know that a lawyer is expensive, but there are lots of law firms out there that do fixed price solutions for this kind of area.
Oh, cool.
Yeah. So it's only probably a couple of $1,000s for, to work through a deal on that. So that's pretty good.
Okay. The Unio Growth Partners website, good place to go?
Probably more my LinkedIn. UnioGrowthPartners.com is there. That's sort of what I would say is our vehicle. I haven't touched it for a while because we're sort of going through this process of thinking how will we help in the future. My idea is to combine, what I do in a consulting world, which is, helping businesses with their strategy and their growth and marketing, their sales, digital, turn that into, equity in businesses, and in the long run, really make our mixed portfolio of private and listed investments compound. So Unio is Latin for union. It's the union of all these crazy ideas I've got. But what does that look like in the future? It might look a little bit different, I think. As we were just discussing before, I think I would be better suited to be in a union with others in this space, not just a sole person going it alone. On my LinkedIn, I find, LinkedIn's a funny space, but it's a kind of a good space where you can talk about this and listed investing, in a way that resonates with other people. Okay.
I like it. I'll put links to all that in the show notes. You've got a plane to catch back to the Sunshine State, my man.
I do. Thanks so much for being here. It's good. This is good therapy. Thank you.
Yeah, welcome. And I hope we just need to cue some nice music as you exit through the lobby.
Yes.
But mate, Leigh, this has been heaps of fun. Hopefully we can do it again sooner rather than later, and we can check in and get that multi-bagger status and hear all about that. So, mate, really appreciate you sharing your wisdom.
Yeah, thank you. Thanks, Owen.
Thanks for watching this episode of the podcast. If you want to hear more from us, you can get daily videos and podcasts on Rask's YouTube channel, or if you want to enroll in a free course on investing, property, business, money, you name it, you can join over 34,000 other students and enroll in a free course on the Rask website. Simply head to www.rask.com.au and follow the prompts. Thanks for watching this Rask podcast.